How much gold do you need to be in the Millionaire Club? Welcome to the Golden Benchmark. Gold. For centuries, it has stood as the world's most enduring symbol of wealth, stability, and timeless value. From the treasuries of empires to the portfolios of the ultra-wealthy today, gold remains more than just a precious metal, it's a statement. It says, "I'm not just playing the game, I understand how it works." But what does that really mean for modern millionaires? How much gold is actually being held? And more importantly, why? This is not just about portfolio allocation. This is about mindset, risk management, and understanding what the financially elite do differently.
Welcome to 86 Dawn Finance YouTube channel, where we break down the hidden mechanisms controlling your financial life. Let's break it all down. No fluff, just the truth.
1. Understanding the millionaire category. Before diving into ounces and vaults, we need to understand who we're talking about. Financial analysts typically classify individuals based on their investable wealth. That means assets that can be liquidated easily, excluding primary homes or long-term business stakes, while categories like high net worth and ultra-high net worth are often mentioned. What matters is this: we are referring to those with the kind of wealth that is carefully managed, diversified, and strategically positioned. As Morgan Stanley's chief global strategist Andrew Sheets puts it, the difference between a high-income earner and a high-net-worth individual is strategy. One accumulates wealth, the other preserves it. And gold? It's one of the few assets that bridges both. 2. How the wealthy think about gold. Most wealthy individuals don't see gold as an investment. They see it as protection. According to the World Gold Council, gold is typically treated as a non-correlated asset. It doesn't swing with the stock market, and it has no counterparty risk. This is especially important in periods of macroeconomic instability. As UBS Wealth Management recently noted in their 2025 Global Outlook, gold's appeal rises not because of returns, but because of its role in cushioning systemic shocks. For wealth preservation, that is non-negotiable. Furthermore, it's not uncommon for family offices, private firms that manage the wealth of wealthy families, to allocate a fixed percentage of their portfolio to gold. Regardless of market conditions, it's a form of strategic insulation, not speculation. 3. Why gold isn't about the numbers. Let's be honest. The question, "How many ounces should I hold?" misses the bigger picture. The real answer isn't in how much gold, but why you're holding it in the first place. According to Ray Dalio, founder of Bridgewater Associates, gold should be seen as a form of currency, not a commodity. He often highlights gold's historical role in balancing portfolios during global shifts in monetary policy. In practical terms, this means that whether you hold a few ounces or several bars, your gold allocation should reflect the risks you're trying to offset: currency devaluation, inflation, geopolitical instability, or systemic financial collapse. Gold isn't about return on capital, it's about return of capital. 4. From mindset to methodology. In private conversations with financial advisors from JP Morgan Private Bank and HSBC Premier, a recurring pattern emerges. Their wealthy clients rarely obsess over gold's daily price. Instead, they focus on the framework. Gold is stored across multiple jurisdictions. It's held both physically and digitally, often through custodial services like Brinks or Loomis. Holdings are integrated into long-term estate and tax planning structures, including trusts. One advisor described gold as the foundation layer in a multi-asset fortress. It's not flashy. You won't see it on a statement, but it's the asset clients reach for when everything else gets too noisy. Interestingly, The use of gold by UHNWIs often goes unreported in surface-level financial snapshots. Much of it is stored discreetly, through nominee ownership, offshore structures, or private vaults, not for secrecy, but for sovereignty. 5. Why gold still matters in 2025. With Bitcoin hitting all-time highs and artificial intelligence fueling explosive equity returns, gold might seem like an old-world hedge in a new-world game. But that perception would be short-sighted. According to a report by BlackRock's Strategic Advisory Group, gold has actually increased in portfolio relevance as more volatility enters traditional and emerging markets. In times when confidence in the system weakens, tangible assets regain power. They write. Even famed investor Warren Buffett, historically skeptical of gold, has acknowledged its growing strategic utility. His firm, Berkshire Hathaway, quietly bought a position in a gold mining company in recent years, signaling a soft pivot in philosophy. At the same time, central banks across Asia and the Middle East have significantly increased their gold reserves, reinforcing its role as a global standard of value. So why does gold matter in 2025? Because when the dust settles from rapid digital disruption, the markets still listen to quiet power, and gold has never had to shout. 6. Building like the billionaires. So, how much gold do you need to be in the Millionaire Club? Maybe the better question is, how much uncertainty are you preparing for? Because in a world where wealth is measured not just by numbers but by resilience, gold plays a central role. It isn't there to help you double your money. It's there to ensure you still have money to double when the market turns against you. Wealthy individuals don't guess. They build systems. They use gold not to impress others but to immunize themselves against the unpredictable. As billionaire investor Jim Rogers puts it, gold is not going to make you rich, but it will make sure you're not poor. If you want to play the long game like the rich, start thinking like them. You don't need to fill a vault like Scrooge McDuck, but you do need to understand why the vault exists in the first place. And gold? It's not just metal, it's a mindset.
Please note that 86 Dawn Finance does not offer advice on taxes, legal matters, investments, or finances. The content is intended solely for educational purposes and should not be considered professional advice. For personalized guidance, please consult your own qualified advisors. Although the information has been carefully researched and reviewed, it may not represent the latest legal or financial updates. Viewers are advised to confirm the accuracy and timeliness of the information, particularly before making any major financial or legal decisions. Until next time, stay informed, stay empowered, and stay our 86 Dawn Finance channel.